Today we're going to talk about knowing all the variables of your best trading setups. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Beginning of the week, we've already had some pairs start to expand their ranges this morning. Beginning of a new week, new lessons learned last week, some fantastic opportunities, and we're going to have more of that again this week. One of the things that I harp on all the time is repetition, and I talk about peeling the onion back and deconstructing everything down to the simplest steps, because I have to work backwards in knowing, when you start to identify the trade setups in live time, you're not going to see the same setup all the time. It's going to have a similar repeatable pattern, but there's going to be different variations. The market's going to constantly be in an evolving dynamic state, but the process for me needs to be the same. And so the simpler I can break each step down in my mind about knowing, and again deconstructing how I will perceive and process that information as it unfolds in live time, is why I break these down into these steps. Because I've had some traders message me and say, I don't think that structure is important. I think the timings don't matter. And that's all fine. It doesn't matter if it works for you. This is what I do. This is why I break each step down. And every week there's just a little bit of a subtle learning nuance about how to fine-tune that, because again, my goal is to trade certain setups and increase size and just keep pushing the boundaries for me of that border between comfort and discomfort, and challenging myself to see not only how good I can get, but how big I can get. And the first objective is obviously consistency, and then once you get consistency, it's recognizing the different variations of where you pick up your best trade setups, but what I look for in my setups. And then when you start to see the same patterns showing up over and over again, identifying those little subtle variations and how you can narrow that down to knowing, is this a type 3M for a sell day? Is it a double bottom for the US session reversal for a move back through the measured move back through the high of the day? Little things that, again, if I deconstruct everything back, I know that as the day unfolds, I can start to look at the structure. I can get a big picture scenario. Maybe I'm in a bigger structure. Maybe we're up high, maybe we're down low. But then I can start looking at the high of the day to identify, are they extending the range out, or do we have a high and a low for the market to now trade off of back and forth within that bigger structure? Have they moved the market 25, 50, maybe 75 pips from a peak formation from a previous day's high or low? Timings. What time is it? Have we hit one of the highs or lows in that 12 candle window? The hour before the equity markets open, the hour of the equity market open, and the hour after. And of course, we talked about the 717, where we can actually have a peak formation already in place prior to the 12 candle window, because they've already done the stop hunt or the break to the high or to the low. We're going to be at numbers. Think about how a computer system and an algorithm work. There's only three things really that algorithms can do for the most part. They can trade based on time, they can trade off of numbers, and they can trade off the highs and lows of the day. But what's it really all about? It's about getting the money. They are after the money. Where is most of the money? Usually at the high and the low of the day. When the markets open, they move the markets, they hit the stops. These trades will usually be at numbers. The high and the low may be extended out past the numbers. So that's why we'll often get 25, 50, 75 pip movements, because those are often movements back into an existing profitable trend. Somebody asked a good question. How do you know when they've locked in the high or the low? When they've gone to the high or near the high or near the low, you'll get an engulfment, which is a reversal candle that traps traders in the wrong direction Usually when it's locked in and they move that market, they've got volume trapped up high or down low that they're going to either continue a trend or shift the market and reverse it, and they don't come back. Because if they come back, they allow traders that are in losses to get out at break even, or maybe even with a small profit. And that means they're giving money back that they've got locked in as profit now, giving it back to those traders. One ATR stop, a 1-bar stop. Somebody asked another question. Can you explain a bit more about a 1 ATR stop? Basically, if you're selling at the high is your stop. If you're buying at the low is your stop. And that's roughly going to be 1 ATR, one average range. 10 bars, 5 bars, 12 bars, it doesn't matter. I use just a constant. It's going to be 20, 25 pips, but when that engulfment's there, if it's a bit more, sometimes it's a bit more. Sometimes it's going to be a bit less, but roughly it's going to be 1 ATR on average. It's going to be at numbers. Typically, if it's a round number 50 pip box, the stop hunt will have already occurred, probably into that upper or lower 25 pip box. We're going to target, or I target 50 pips unless I'm in a bigger geometrical structure where we might have a head and shoulders, a double bottom, a descending triangle, an ascending triangle. We might be in a rectangle for a measured move with a sell high scenario. So we may target, or I may target, a measured move, but again, it all depends on how price behaves when it gets to those levels. So the number one thing though is managing your risk. That's the most critical thing. And then of course, number two, I'm always managing myself. I talk about self-talk, meditation, just sticking to the steps. And every day when I'm at the screen, I'm looking at the chart. And I know what my perfect best trade setups look like. So when I'm looking at the chart, I can sit there and say, if I was to look at this tomorrow, does this fit my criteria for that trade setup? And unless I can see that, because I've looked at enough of these in prepping and studying and reviewing and testing, that I know what my perfect setups look like. And when I look at it, if I can't see that, then I know that I'm not in that trade setup just yet. You don't need to get in early. So you want to manage yourself and manage the trade. You know, people talk about smaller time frames. They've asked me, do I go down to a 1 minute? I've done that in the past. But you need to understand that if your trade is right, if I'm in the right trade setup, getting in early might be a few pips either way, but now I'm adding in another variable for me to make a decision with. But when I use the 15-minute charts, if I'm in the right trade, it doesn't matter if I'm in early or if I'm in a bit late. It matters, of course, in terms of your fill price, yes. But when you're in the right trade, you're in the right trade. So getting in early, trying to time it on a smaller time frame, those are all decisions that an individual trader has to make. I know that if I get the right setup and I enter in on that bar, that it doesn't matter whether I got in early or I got in late. When I try to get in early, it tends to not work out well because it's not right. It's not the right trade. I've talked about this in the last minute. They'll move the market and the candle will completely change what it looks like. They'll move it from a breakaway bear candle to a bull pin bar in less than a minute. So sometimes, again, it's important to wait for closed candles to confirm your trade entry. Pin hammers and engulfments, and again, that pin hammer is often the stop hunt into the trader who's gone in on the first mouse on the engulfment. And that's just the last little grab at the cash to shake people out of winning trades or stop them out at break even if they've gotten in there too early. So for each one of my different types of setups, you know, a sell high setup with a triple top, a descending triangle, a rectangle, I've gone back over hundreds of trade setups. You're going to see the same types of setups each week but different variations. But looking at the different types of variables that you'll see in those, and then again, for me, it's always about working backwards from live time. What was I thinking? How did it evolve? How could I piece that together? And then breaking it down more and more and more so that even as the day unfolds, how far have they moved from a peak formation? 25, 50 pips? What time is it? Are they working the high or working the low? Are we into the 12 candle window? Are we near numbers? How far are the peak formations away? Is it 50 pips, 75 pips? Could it be a measured move, a bigger geometrical structure for a measured move? This is the type of stuff that I like to look for, because when you're in the right trade, it's not a fast bang, bang, bang. It will move quickly, but we're targeting measured moves. So instead of getting 50, I'm looking for 100 pips or more, especially if it's a peak formation high for the week or peak formation low for the week. Because being Friday, Monday, we may have some peak formations that form today. For measured moves, there's some big ranges on some of these pairs. And so when I'm looking for these setups, these peak formations on these other geometrical structures can give me some insight into how the rest of the day will unfold in terms of the US session as well as the rest of the week. If they don't play out in that scenario, now I've got a plan B, because we could be going the other way and we could be looking at some other types of structures for moves in the other direction. So again, just to review, structure, highs and lows. Are we seeing something unfold that has a bigger geometrical pattern? A triple top, a triple bottom, double top, double bottom, descending, ascending triangles, rectangles. Where's the high? Where's the low of the day? Are we inside of peak formations from yesterday? If we are, how far back have we come from them? 25, 50, 75 pips. Has the market given us any indication in terms of price action of putting a peak formation in place? What time is it? Have they done a stop hunt in the hour prior to the 12 candle window? Have they gone 1, 2, 3 to the high or to the low? Are we in a breakout for a trend trade? Round numbers. Where's our box? Where's our 50 pip box? Are we in a quarter level for an extended stop hunt, or are we in a breakaway trade for a 00 to 00? Those sorts of things. When the market's open, or have we already got an engulfment in place? Is there an existing trade already in place when we get to the 12 candle window? If so, do I want to be trading in line with that? Or are they working back into the trade, the stop hunt traders who are already profitable? What's the setup in relation to that? Have we gone sideways? 1 ATR stop, 50 pip measured move targets. You do not want to be using bigger than 1 ATR stop. If I have a stop that's bigger than that, or I don't use a stop, and they're going through to another quarter level or another 50 pip box, your stop will blow at a lot bigger than 25 pips. So again, just thinking in terms of numbers, if I'm getting in at numbers and I think they've locked in the high or the low, if it's more than 25 pips, they're going 50, because my stop loss is already the high of the day. And if I'm wrong, or the low of the day, if I'm wrong, they're going to be doing a measured move through that range. And that's really important to understand. Have a great trading day. Keep it simple. Start the week on a strong note. Keep getting better, and may the markets go.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.